back. You're watching Indian Open right here on BloombergQuint Live. Asian markets this morning are seeing cuts, marginal cuts, not too harsh. So we've got Japan just under by about 8 odd points. Hong Kong's trading with cuts of about 0.5%, while China trades flat with a slight negative bias. On the SGX Nifty, though, we're trading absolutely flat. Again, the bias is on the negative side, just a 4-point cut that we're seeing in terms of trade. Again, the focus when it shifts back to our own markets, it's going to be purely actually for the index itself, not so much so, but individual stocks and the whole host of earnings that came out yesterday. I mean, post-marketers, particularly at least from the index, you had Axis Bank, Asian Paints, and the numbers of Asian Paints, are slightly negative, considering that the volumes got the boost only because of their low margin businesses like distemper and putty, and not the fact that their realizations also suffered a bit. Yeah. So you could see a slight bit of an impact, and considering that this is a very expensive stock, you've seen the stock price running up, it could actually see a little bit of a setback in today's session. Yeah, that Axis might do okay. Infi might not put that much pressure. RBL will continue to do what it did so far since quarter 1, and since the negative commentary of quarter 1 that sort of played out in quarter 2. Yeah, so all of these maybe it's very stock specific because the index unlikely to do so much. Maybe because Nifty IT also will not be as brutal as it was yesterday. And Infosys, what happens to that one this morning? So all of that will be kept in mind as we set up a trade this morning. But also let's quickly take a look at what happened in the derivative space yesterday. Navneet is standing by to update us. Navneet, good morning. Good morning to both of you. Well, index, that's Nifty, continued to form higher highs, higher lows for the 6th trade session. We did touch the mark of 11,700, but there was some fresh supply seen around those levels. So finally, the closing on the futures came in at 11,624, but there were fresh positions seen as the open interest went up by 9%. Remember, the bank Nifty outperformed yesterday while the index was up 1%, but the short covering bounce continued here as the open interest fell by about 3%. Volatility was on the higher side, not a very good sign for the bulls. So India wicks towards the end rose to levels of about 16.8. We'll see if there is any sort of cooling which takes place in today's session or not. So looking at the options data, what are the levels you can watch out? Yesterday was a day when there was more of call writing seen around the level of 11,700 and 800. As I said, there was supply seen around these levels, which is viewed as a resistance mark, while some put writers ran for cover. 500 and 400 strikes saw some bit of unwinding. On the stock future side, a lot of results reactions were seen. So you had Jubilant Foodworks, open interest went up by 29%. The stock was up 5%. Long position seen here. Piramal also saw positive reaction post the numbers. Long seen here as well. And long unwinding seen for Ambuja Cement, which had gone up ahead of the numbers, but because of disappointing numbers, there was some cooling off seen in yesterday's trade. All right.
Very quickly, Navneet, what about Infosys in particular? How are the trading internals after yesterday's move?
Well, very interestingly, if you look at the cash side, the stock fell by 16% on maximum highest ever volumes rather than highest ever delivery data as well. With yesterday's 16% fall, now it's given up its yearly gains. The stock's now down 2%. And if you look at the volumes in yesterday's session, they were the highest that we had seen since August 18, 2017. That was the day when Vishal Sikka also resigned. Almost 64% of the traded quantity was delivered yesterday. As you can see, 9 crore shares were traded, out of which 5.78 were delivered. And if you look at the internals of August 18, 2017, 8.2 shares were traded, out of which 4.2 were delivered. Looking at the derivative side, of course, there were short positions seen, and it was very visible even if you looked at the intraday internals as well. So futures saw fresh short build-up of about 32%. Now remember, this fresh short build-up came in after a gap down opening of 10%. There was a circuit of about 15 minutes when the markets opened yesterday, telling you traders were taking short positions even at lower levels. Whereas on the options side, the most traded strikes yesterday was 600 put as well as 700 call. So going ahead, a lot of traders I spoke to, they said the first support will come in at the 600 strike. 600 levels, pardon me. All right, Navneet, thanks for that. In fact, to take that conversation a bit further and to discuss a little bit more about what's been happening in the futures and options space, and particularly the activity that we saw in Infosys, Bhavin Mehta of Dolat Capital is joining us right now to discuss that very issue. Bhavin, thanks very much for taking out the time. What do you make out of the futures and options positions, especially the kind of trades that were taken in the options market for Infosys?
So as you have correctly mentioned, that good amount of short entered in yesterday's trade, specifically with the stock breaking 700 level. Now this 700 level was crucial. We have seen multiple support around that particular zone. But if you look at the monthly chart of Infosys in particular, we are looking at stock once again moving into the previous old channel with the support close to about 550 zone. As you have rightly pointed out, on the option side, we have seen good amount of addition at 600 strike put, which was close to about 2.6 million shares. However, we believe that if this particular level is broken, it could be further negative for the stock. Also, specifically with respect to IVs, IVs for this particular stock continues to remain significantly higher. We are looking of IV on the call side close to about 64 to 65, while on the put side it continues to remain much higher at 80 levels. So I would be very cautious in this particular stock. Believe unless stock is not able to close above level of 700, pressure should continue for this particular counter.
Is there a trade possible then, Bhavin? I mean, obviously yesterday was a falling knife. If you're caught on the wrong side, almost brutalized there. But what would the trade setup look like now that, we've digested the fall? Now we've got probably some clear indications in terms of the lower range of Infosys. How would you trade it?
Okay, so looking at the current positioning of the Infosys as well as stock breaking out with significantly higher delivery markup, my sense is that probable downside towards 600 is not ruled out. This will be the first support zone that participant would be looking for some amount of breather. If this level is also taken out, anticipating another 7 to 8% downslide on this particular counter. So I would recommend to either take a short position by buying a call that is for the hedging purpose. 650 call, which is quoting currently around 42 for next series, not the current one, for the next series. One can probably short the futures for probable target of 550 on the downside by hedging with 650 call. Also, theta loss on 650 call will be lower in the initial stage. So if we see a momentum move closer to level of 550, 575 on downside, definitely you will not see equal amount of loss on the call front. So that would definitely benefit. Stop loss for all the position close to about 680.
Just one final question, Bhavin. What did you make? I mean, you already spoken about what did you brief options activity that you saw. My question is, if the higher OI on the call and the put side is to be believed, would you believe that the range at max is 700 to 600? Say, for example, some institutional investors believe this is a good time to get into the stock. Would there be some natural resistances that the stock might face at certain key option levels?
So definitely
on the upside, I mean.
Yeah, so definitely from institutional perspective, we have seen good amount of interest. However, there is uncertainty that is looming at large. So unless that is not clear, my sense is that overall trend for the stock remains negative. This is clearly indicated by the way stock markup in the delivery side was significantly higher. It was close to about 3,700, 3,800 crores on the delivery side. So my sense is yes, definitely 600 level is the immediate support zone. We may see some amount of demand coming in at that level, specifically given that stock is already wiped off close to about 15% in yesterday's trade. But at the same time, if you look at clearly from the price point perspective as well as the IVs, which is significantly higher for a large cap like Infosys post results here, my sense is, the pain could last for some time now. We just have to wait and watch out how this particular stock plays out. For positivity, I don't see stock moving significantly higher above level of 670, 680 in short period of time. We'll have to monitor the development going forward.
Bhavin, appreciate you taking the time out and speaking to us on BloombergQuint this morning. Thanks.
Thank you.
Well, that's the view on Infosys, the options activity, what we saw yesterday. Difficult to preempt, really. I'm not trying to judge whether it is a speculative or non-speculative buy, but on the options front yesterday. But interesting to see if there is some buying that comes in today or no. Amit Jeswani, founder of Stallion Asset Management, talks about buying value so many times. Amit, good morning. Thanks for joining in. Wondering if you are seeing value in Infosys currently.
Hi Neeraj, good morning. Thank you so much for having me on your show, and a very happy Diwali to all your viewers.
Thank you, Amit.
Neeraj, we're not tracking Infosys so closely, so I won't be the right person to tell you. We're looking at broadly 4 sectors, which I keep telling you about: consumer, pharma, consumer tech, financials and consumer stocks. So those are the only 4 sectors that I'm looking at very closely. We very strongly believe that this is where large wealth will be created for the next few decades to go forward. But if you see, Neeraj, the markets are looking good. Okay, so the news every day you see, this is like the proper wave 1 accumulation, where the news is bad, but the market refuses to fall. So the markets are showing signs of accumulation. Now, I'm pretty confident the bottom is behind us. So now what are the stocks that's going to make money for us? Now, there are 2 kinds of stocks. One, so what the stocks that typically lead the bull market are the first ones to break out. And it's not that only one stock of that sector will break out, the entire sector will break out. So you see that in insurance, AMCs, consumer durables like Voltas, Whirlpool, Blue Star, all 3 players there. You have your consumer lenders, which all good quality consumer lenders are breaking out. And these will look expensive to you. In the first phase of the bull market, that's always been the trend. They will look expensive, but they will keep rallying higher. Then you have the leaders of the previous bull market, which were the corporate facing NBFCs. They look cheap, but we do not buy the leaders of the previous bull market. So that's broadly how the markets are placed. The markets look good. If you see the result season as well, Neeraj, it's been a very, very good result season till now. Yeah. Let's see how things go going forward.
Yeah, well, we're going to talk to you about some of those consumer results that have come out yesterday as well. Maybe a couple of banking names, Amit, but just hang on because we need to go across to our research team to talk about some of the key stocks in news. And, well, speaking of results, we already spoken about Hero and Bajaj, but the other 2 large names that will come out with numbers, which is JSW and L&T. So talk about all of those. Nikki, Sumit, as well as Darshan join in for that. Good morning to all 3 of you. Sumit, let's start off with you first, the stocks in news.
Well, I'll start off with the earnings. Bajaj Finance, where the revenues were up nearly 47% compared to last year, while the net profit increased by 71%. But the key corporate announcement that came in from Bajaj Finance was that Bajaj Life Insurance has signed a corporate agreement with Axis Bank in the second quarter of financial year 2020. Secondly, Mahindra and Mahindra Financial, mixed set of numbers with stable asset quality but weak operating performance. There was a sharp surge in the credit cost and weak disbursement growth in the second quarter. Weak disbursement growth highlight weak economic sentiment and sluggish rural consumption scenario. However, the company's AUM grew 22%, which was strong compared to last year. CIAT, a weak set of numbers with 5% drop in the revenues and a 30% drop in the net profit. EBITDA, however, came in higher due to sharp decline in staff cost and because of a favorable product mix and some commodity benefit that the company got in the second quarter. However, the company's finance cost was up nearly 2 times, while the raw material as a percentage of sales was down nearly 59% compared to 60% in the last year. ICICI Prudential Life Insurance results were largely in line with analyst estimates. Strong growth was seen in the protection business, but there was a dip seen in the persistency ratios of the company. The protection business momentum remains strong, driving VNB growth for the company. Lastly, a couple of stocks other than results. Firstly, Land India, where they will be selling their land in Chennai and Hyderabad, and they will be getting close to 1,400 crore rupees from the sale of lands. Lastly, Sterling and Wilson Solar, where they've got a letter of intent for a solar farm project worth nearly $635 million US.
Yeah, that'll be an interesting one too. Let's wait and watch what happens there. Thanks so much, Sumit, for that. Now to the 2 results that will come out. Let's start off, Nikki, with you. JSW Steel, what's anticipated?
Well, for the metal space, it's going to be a multi-quarter low profitability altogether, and JSW Steel is going to be no different. But in terms of consolidated estimates, we are expecting a 17% downtick there on that number. In terms of profitability, we're expecting a 75% dip. That comes on the back of a dismal, or rather decline in the operational performance of 43%. In terms of volumes, the figures are not good. They're not looking good as well. Consolidated, we're expecting a downtick of nearly 11%. On standalone basis also, volumes are expected to decline by as much as 8%. Essentially, we do understand bulk of it is coming in from the domestic business, and one key number that we like to keep an eye out will be the standalone EBITDA per ton. That is also expected to decline by more than 30%. The number that we're working with is around 8,000 rupees as compared to 12,000 that we've seen in the corresponding quarter. Well, in this quarter, what goes behind the making of these numbers will be the weak demand and the sharp fall that we've seen in steel price as together. Q2 traditionally also is a weak quarter for the steel companies, and this time around, realizations are also expected to take a dip on account of that higher mix coming in from the exports bit. But to an extent, lower input price might just offset the negative impact seen by realization. HRC prices are down by 17%, but in terms of the cost pressures, domestic iron ore prices have been up by 10%, but coking coal has been down by as much as 2.5% year-on-year.
Okay, thanks a lot, Nikki. Darshan, what about Larsen & Toubro?
Yeah, it will be muted given the fact that elections were there. There were international orders. You've seen issues there. So there were issues, and we're just seeing a 10% growth on the top line of L&T. Profits will be down 4% given the fact that other income will be lower this time around, and margins will be stable at 11.5% this time around. Orders, it's important to see what kind of orders they get in. Now they don't give the exact number, but the buckets that they have given indicate at the lower end it could be close to 30,000 crores, and the higher end it will be close to 40,000 crores. So on an average it comes to close to 40,000 crores of orders is anticipated to come this time around. Some bit of issues that you need to watch out for. Execution will be an issue. State elections were there, national elections were there, so that actually impacts projects, so that will be issue. International orders will be muted given what we've seen as far as the trade wars are concerned. Margin will be actually aided by the consolidation of Mindtree, which will happen this time around. Lower other income will impact profits of the company. Now guidance, what they did in the first quarter, they maintained the revenue guidance at 12 to 15%, order inflow guidance at 10 to 12%, and margins ex services to be close to 10.5%. It will be important to see what the management says, and usually over the past few years they have been managing to cut the guidance in the second quarter. It will be interesting to see what the management does.
Well, thanks for that, Darshan. And well, a few stocks that you need to monitor now. Amit, I wonder which of these three nifty names that came out with numbers yesterday do you track? Axis Bank, and what did you make of those numbers? If not that, Asian Paints, what do you make of those numbers? If not that, Bajaj Finserv and the tie-up that they now have with Axis Bank for distribution.
Axis Bank, Neeraj, came with fantastic set of numbers. I'm getting a sense that Amitabh will pull it off. So that is some stock that I would strongly suggest everyone to keep it on the watch list. If you see their BBB and below book, it's just 13-14%, whereas for ICICI, RBL Bank, and most other banks, it's 30%, like B2B and below book. I believe the asset quality problems are behind Axis Bank. It's at 2.3 times price to book, and if he was expecting, Amitabh had given a guidance that my ROE by 2022 will be 18%. Now, because of the tax cut, automatically his guidance changes to somewhere around 20-21%. Even if he does 18%, I can tell you this stock will trade at somewhere around 4 times price to book. So you get an inherent re-rating because of ROE compounding, as well as you get the price to book moving higher from 300 rupees right now to about like 300 is the book value right now. And you can compound capital at Axis Bank. What I'm trying to say. Asian Paint, it's a decent set of numbers. Basically, last quarter was way too good. So markets were expecting this quarter to be as good as last quarter, but that was not the case. So probably some selling off. But you don't sell these kind of stocks. You just buy them when they fall. Neeraj, in financials, use technical analysis, where once good news starts, it just keeps trending. In consumer type of stocks, use fundamental analysis when you buy these good companies when they dip down. So that's what we strongly believe in. The third one you said was about Bajaj Finserv. Well, Bajaj Finserv is divided in 3 parts. Bajaj Finance, like always, absolutely fantastic set of numbers by Bajaj Finance. The insurance business, if you see the general insurance business, now crop insurance, the growth in Bajaj Finserv's general insurance business is coming because of crop insurance. Now you have Bhargava, who's the CEO of ICICI Lombard, who says that, boss, I'm not going to do general insurance at all. And ICICI Lombard has made general insurance 0%. And on one side, you have Bajaj Finserv's general insurance business, who's made crop insurance 40%. So these are two super smart managements. They have taken very different ways of going about general insurance. I strongly believe what Bhargava is doing, Bhargava of ICICI Lombard, is doing this the right thing. But let's see. So I would not buy Bajaj Finserv when I can straight buy Bajaj Finance.
Would you?
So that's my view on all three results.
What did you make of Bajaj Finance's numbers then, Amit? I mean, in yesterday's session, while we know the AUM grew by about 38%, would it be that now at levels of 4,000, you'd be slightly more, tight-stringed in terms of going all out and buying a stock even like Bajaj Finance, or you just wait it out, more favorable prices, and then take a call on it?
Devina, we're up 100%. So it's up 100% plus in the last 1 year. The stock can consolidate, no big deal. But where do you find a franchisee which is growing at 30-40%, does 28% ROE? You don't find, if you think about it, if your growth equals to ROE, you will not have to dilute again. Bajaj Finance's ROE is now 28%. So once this dilution happens, the growth rate of 40% will not be forever, right? So once this dilution happens, will Bajaj Finance need one more round of dilution? So that's one question that I keep thinking about, because if your ROE remains that high at 24, 25%, 27, now it's 28% now, but if it remains at 24, 25%, does Bajaj Finance need to dilute? Because their fee income is growing faster than their AUM growth. So I think this is like a compounder kind of story, and you need to wait for dips, and whenever you get them, you buy them. So till the time the NPAs, so if you see the con call, Rajiv Jain has the CEO of Bajaj Finance, he's clearly pointed out that my NPAs will go lower by the end of Q4. So that is something that we look out for, and things look good at Bajaj Finance. See, they can easily scale up the housing finance book as well. It is a good business. It's a consumer retail franchisee, but till the time there is growth, we will be there. If the growth slows down, we will get out.
Got that. The 12-month performance, 93% up for Bajaj Finance. Extremely steep move there on the upside. But let's also bring in our technical experts right now to take a call on how to trade the markets this morning. Whether or not there's anything stock specific, index specific. Gaurav Bissa, AVP at LKP Securities, along with him Chandan Taparia, Associate Vice President, and Motilal Oswal Securities joining us on the show right now. Let's talk about your call on the index first, Gaurav Bissa. What would you do on the Nifty? Yesterday's session, morning, the first half was encouraging, but the second half obviously dragged lower by Infosys.
Good morning. The trend still remains positive. We have seen multiple hurdles being taken out with relative ease. We're not seeing some aggressive short pushes getting built, even the large cap names, barring Infosys. We did not see too much of pressure coming in. So the trend is intact. There was some amount of writing that was seen in 11,700, 11,800 calls, and that turned out to be the first line of hurdle or resistance for the Nifty index. So for me, the trend is positive. This is a buy on dips market. One can buy at the current prices, keep a stop loss of 11,530. On the upside, 11,750 is what I would be playing for. Or one can buy a call option also. That would also make sense. One can buy a monthly call option, 11,700 call option. That can be also a good strategy as well. So for me, the trend is intact. As long as we are trading above levels of 11,500, the dips can be bought. If we are to close below 11,500, then probably the very short-term trend might see some amount of dent. Again, I'm not talking about we will revisit the levels of 11,000 or below that, but yes, below 11,500, we can revisit levels of 11,350, 11,280.
Chandan Taparia, what about you?
Yeah, first talking about the market, after the strong recovery of 6 trading session yesterday, market took a pause led by some selling in Infosys, but comparatively the trend is still intact. However, it respected to key hurdle of 11,700, which made after the announcement of FM regarding to abolishing FBI surcharge. So technically the setup is positive, but we are near to hurdles, so market may see some consolidation. Again, after the consolidation, it may require momentum to surpass this range for moving on higher side. So as of now, we believe that buy on decline strategy could continue looking at the options data and the FIs data. So for me, the 11,500 is a key support. Any decline could be bought, and upside target could be 11,700, 750. So talking about the trading ideas, first trade is buy on ICICI Bank. In last 2 tradings, we have seen some recovery in the Bank Nifty index, and comparative outperformance was seen mainly because of the buying in ICICI Bank, HDFC Bank, comparatively Axis Bank. So we believe that as Axis Bank and ICICI Bank could do well, and especially talking about ICICI Bank, this stock is continuously making a higher top, higher bottom from last 3 weeks and all set to give the fresh breakout at the lifetime high territory. We believe that fresh momentum cannot be ruled out, so recommending to buy with a stop loss of 441 for the new target towards 471. Second trade, that is buy on Titan. This looks quite promising. It has seen the strong recovery in last 6-7 trading session, and given the recent highest daily close and multiple price breakout with open interest activity also indicates up move in the counter, recommending to buy with a stop loss of 1300 for an upside target towards 1385 levels.
Okay, since it's 8:52, let me just first go across to our special segment, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Yash, what's the stock on your radar today?
Morning, Neeraj. So we are looking at Tech Mahindra, and most of these IT names, they are in focus. So Tech Mahindra being one of them, and the indicator that we've used over here is the stochastics indicator, which is indicating a sell signal on the counter. Now, the stochastics indicator, as you know, is a trend following momentum oscillator, and it helps you identify when a price move is overextended by measuring its current price relative to its highest highs and lowest lows. How do you interpret it? Well, any crossover that indicates a buy or a sell signal. Overbought is above the mark of 80, and oversold is below the mark of 20. Now, coming back to the price chart of Tech Mahindra now, this is where in the lower panel where you have seen the negative crossover happen on the stochastics indicator, when the stochastic line has crossed below the signal line, and that has given a negative trigger. Now, but important than that is the price action that we are seeing, and this is as far as the daily time frame is concerned. The pink line over here, that is the 200-day exponential moving average, and that is where the stock is taking support. Now, the trend before this has been largely sideways with some amount of buyers on the downside. It has been moving in a one way, but should it manage to crack below the 200-day exponential moving average, we could see further weakness. But as of now, the stochastics indicator in advance is giving a negative sell signal, but once it cracks below the 200-day exponential moving average, we'll get additional confirmation.
And whenever it has done this, how has the stock reacted in the next few days?
So Neeraj, 3 out of the last 5 times that the indicator has given a negative crossover. On a closing basis over the next 1 month, the stock has managed to crack about 4.8%, but on an intraday basis, that number is far, far higher.
Okay, on an intraday basis, far, far higher. Let's wait and watch what happens here. That's Tech Mahindra. Do watch out for that one. Thanks, Yash. Gaurav, your stock ideas for the day.
The first recommendation would be buy on Coal India, where we have seen addition covering happening. 200 was the immediate hurdle. One of the highest lower consolidation was seen at those levels on the call side. It's now comfortable trading above that. Double bottom breakout on daily charts. It can head towards 216, 218 kind of levels. One can keep first stop loss of 206 and be long in the name. Second recommendation would be buy on Titan. So a major part of the rationale has been given by my friend Chandan. So I would just add one more point. It's on the cusp of a good breakout on daily charts. We call it as a bullish candle pattern. It's a continuation pattern. The targets can be quite huge if somebody can hold for a few months. It can be more than 15-20%. But for trading per se, I would recommend keeping a stop of 1310, target of 1400.
Okay. Amit, you were talking about some of the well-oiled financial names. You've liked a few companies like Edelweiss in the past. They've come off quite a bit. Edelweiss, Piramal, RBL Bank has come off quite a bit. And those numbers leave a bit to be desired. But these names which have got some issues, they are all seeing some buying in the last few days. Are you buying into any of these as well, and why?
Neeraj, we sold out of our Piramal, out of our Edelweiss position. So we had between 2013 to 2017-18, our strategy was to chase the highest quartile growth. So wherever there was growth, we were there, and that was our strategy. Post the NBFC crisis, so we had a lot of NBFCs. In fact, 30% of our portfolio weight was NBFCs. Once the NBFC crisis started, we moved out of all NBFCs. We had Piramal, we had PNB Housing, we sold them all. And we kept Edelweiss in our portfolio because it was a mix of financial services and NBFC. Edelweiss also we got out like 2-3 months back. In the last 2 months, 3 months, we've got out of Edelweiss as well. The reason being we chase growth, and Edelweiss will find it difficult to raise money from the market. It's not that Edelweiss has a large, like that is a small, the problem is on the wholesale book, which is a very small book. And I believe this company will get back, but our strategy is to chase growth. And that will not happen. So these wholesale based NBFCs cannot grow very fast going forward. This is what we strongly believe. We don't, and that is one thing. The second thing is in Edelweiss's business, which changed, is that ARC business, where we were expecting. Like, look at the first phase of the NCLT cases were very fast. But if you see now what has happened, like that Arsenal Steel case, it's a 50,000 crore case. It's a very open and close, open and shut case, but it's taken 1.5 years. So the ARC business also started struggling because of that. The wealth business, there are upfronting problems. Like, there is no upfronting. If you saw, IIFL Wealth also reported decline in numbers. The fourth business is the asset management business, which is also a little weak right now. So all businesses are good. They are great long-term machines. But if growth slows down, we have our own strategy. But Edelweiss will get back to, there will be a demerger in Edelweiss going forward at some point of time, and there should be good wealth creation that will happen here. For us, we have better plays. We have to look at opportunity cost and take decisions, but that's what we've done.
Okay, got that. In fact, let me just get in a few chart checks going also. And while we were on the topic of Edelweiss, Chandan, Taparia, if you track Edelweiss, and also if you track an RBL bank, because since Q1, since it's reported its numbers, the stock has come off on quite a lot of selling pressure, and it doesn't look like that selling pressure is going to go away anytime soon post these numbers as well. So what would be your levels for RBL bank and Edelweiss?
Yeah, first I'll talk about the RBL. I'll talk about the spot level. The major trend of the counter is negative, but in last 6-7 trading sessions, we have seen some consolidation. The counter is having some call writing at 300 strikes, so I believe that 300 could be a hurdle in the counter. So till it doesn't surpass 300, the stock is potential to retesting the recent lows. So by looking at hurdle at 300, one can look at the downside of 270, 265. Talking about the Edelweiss, I'll avoid to comment, but some bounce back could be seen towards 105, 110 levels.
Okay. Gaurav, Bissa, just comment on Yes Bank as well. I mean, obviously, at this juncture, the stock is more of a trading play than an investment bet. So if someone is looking to trade Yes Bank, what levels to keep in mind?
Well, if you talk about the Yes Bank, the immediate hurdle point would be the levels of 51.5, 51, 52. So if it trades above the levels of 51, 50, 52, one can buy. Keep a stop loss of 49 on the upside. 58, 60 is what I would be looking at on an immediate basis. And at those levels, one can again review whether to hold on or what positions should be taken. But at these levels, buy a little bit higher, and we can see the movement coming in. So if today we see the stock holding above levels of 51, 50, 52, then it's a decent buy. I would not call it a strong buy, but it can be a decent buy.
15 seconds left to go, but before we hit pre-open, Amit, thanks very much for joining us. Always great to hear from you in the mornings. 8 seconds to market pre-open, so we just stick with the numbers out there and what the index does for the SGX Nifty. Not much of a change. We're still marginally under by about 0.1%, but the Nifty 50 opens in the green, and so does the Sensex. Marginal gains, about 28 points on the Nifty. Sensex, an uptick of about 100 points plus. Coming to individual stocks and then taking a look at what's moving. Bajaj Finance, the first initial uptick that's coming on the back of its numbers. The stocks moved up 5% in pre-open. Z is up about 3.8%. We've got Reliance Industries, which is up about 2.5%. Bajaj Finance reported numbers yesterday. The stock actually saw a marginal cut in yesterday's session, but today is bounced back to 41.30 now for Bajaj Finance. HDFC Bank, SBI is at 274. HCL Tech reports numbers today, so watch out for that one. That's up 1%. Britannia, TCS are the other few companies trading in the green. L&T also reports numbers. Watch out for that one. But the more interesting watch is Infosys. Stabilized today. So after that 15% drop in yesterday's session, it's a cut just less than 1%, only a 5-point dip on Infosys, which is probably nothing right now. Tata Steel is weak by 1%. Bharti Infratel, M&M, NTPC are some of the other weaker losers in today's session. 71 on the rupee, so some weakness that's come back in. Yesterday's close was about 70.94.
Okay, RBL Bank should come up on your screen, and let's see what that stock is doing post earnings. Well, the damage continues. Don't quite know if it's a 10% or a lower or a higher move, but this move, let's just say this move doesn't surprise. Ujjivan Financial has an unnatural downtick. Maybe this will change, but we'll get to that in just moments from now. Actually, somebody is well equipped to talk about all of this. Chakri Lokapriya will be with us any moment, so we'll talk to him about all of that. Just mind you, 2 days on a trot now, Z-Learn is seeing some traction. Again, this 15% might not last, but is showing some traction. And last but not the least, Piramal Enterprises, the last 3 or 4 days, has done remarkably well. 1748 now for Piramal. Let's wait and watch if this lasts. Jubilant is up around the 3%, so do watch out for this one as well. Last but not the least, Interglobe Aviation, the last couple of days, has seen a spot of bother. Let's see if it continues to grind lower. For now, stable in the session. The bond yields, if you can just pull them up, the currency we already marked is around 71, so no big moves. Bond yields at about 6.52. Okay, so Amit Sarkar, from our research desk, Johnson now with the top brokerage calls for the morning. Sumit.
Good morning, Neeraj. I'll start off with Jubilant Foods, where Credit Suisse has maintained its underperform rating on the stock but has hiked the target price to 1,300 rupees from 1,200 rupees. Now, according to the brokerage, in the second quarter, marginal improvement was seen in the same-store sales growth despite macro consumption slowdown, which is a positive surprise. However, it says that the third quarter same-store sales growth will be key to watch as impact of the Cricket World Cup fades out. It also sees a downside risk to the same-store sales growth given weak broader consumption environment, and margins are likely to remain under pressure due to operating leverage. Second one is on Kotak Mahindra Bank, where Edelweiss has maintained its buy rating and has hiked the target price to 1,847 rupees from 1,632. Now, according to the brokerage, despite current challenges, the bank has reported yet another steady operating performance in the second quarter of financial year 2020. Now, the growth momentum did soften for the bank, but it is apt with the current environment, says the brokerage. On the asset quality, it says that there has been a marginal rise in the asset quality, but nothing concerning given its superior retail franchise and stringent risk management. Lastly, it says that Kotak Mahindra Bank is the best among peers and is better placed when compared to the private players in the banking industry.
So Amit, thanks very much for joining in with those brokerage calls. Let's also welcome in Chakri Lokapriya, Managing Director at TCG Asset Management. He's joining us in the studios this morning. Chakri, thanks very much for taking out the time.
Morning.
Lots has been happening. Yesterday the focus stayed on Infosys. Now we've got some big numbers that have come out from the NBFC space as well. You have Bajaj Finance coming out, private sector banks, a clear trend amongst all of them, using additional tax savings to prop up their provisioning numbers. RBL Bank expected to be a no-show and turned out to be a no-show. But how have you been reading into all these earnings that have been coming up?
I think the earnings, clearly the troubled banks are still troubled, the good banks are recovering. I think that trend is going to continue for quite some time now. So as we've seen in the case of RBL, there is an increase in stress book assets. It trades at about 1.4, 1.5 times. The question to ask is, why would you give that kind of multiple for where an asset quality is falling? So against that environment, I think so banks like that will continue to see a weakening and a de-rating of their valuation. On the other hand, you'll see Axis Bank, ICICI Bank, which are showing improving numbers. We'll see a kind of a re-rating to their multiples.
I actually wanted to ask this because I asked on Twitter as well. I think at the end of quarter two, the book value per share that they've declared is sub 200, if I'm not wrong. Now, what kind of premium or what kind of book value on an annual basis, of course, would you assign to, say, a name like RBL, wherein the quarter is okay, but the future seems a bit uncertain?
I guess there are two things. One is the book, the size of the book, and the quality of the book. Now, in the case of a bank like Yes Bank, where the quality of the book is fairly uncertain, how it will pan out over the next year or two. And that also seems to be the trend in the case of RBL, in terms of, there is a continuing fall or the continuing increase in slippages. So from that perspective, it contributes, therefore, lower profits, therefore lower ROE, lower accretion to the book value, and then pulls down the multiple. And the opposite holds true in the case of when there is a reduction in slippages. So I think that's the way we're approaching. And so as you're seeing asset quality improve for like an Axis of the world, we would therefore assign a slightly higher multiple.
Okay. What did you make out of Infosys? Not just talk about the stock, but obviously, this has happened in the past, and at that time, people found value once the stock came off from those levels, and then pushed right back to where it was trading at just before this event yesterday. Is this still a stock that needs space in the portfolio?
Yes, indeed. I think what's happened, if it's happened, is probably an accounting issue. And an accounting issue, and sometimes companies do aggressive accountings, which is not a great thing. And you've seen that fall, and I think there will be course correction if indeed that is true, if the audit committee finds evidence of that. But outside of that, there might be some changes as a result of the management, which is a good thing that, you still have an organization, a bellwether, a system which is strong enough, which is able to pick things fairly early and bring it to light, rather than it to fester and become a larger thing.
So you don't foresee a valuation derating further?
And also, do you see the focus shifting towards the likes of a TCS now?
Valuation derating, well, from the last time, it happened for a different issue under the previous CEO. The valuations fell further. I mean, I think it kind of bottomed out at about 12, 13 times. It's still trading at about 18 times. So can it go down to 13 times? If something negative comes out in the audit committee report, yes. But if I would suspect that if it was largely an upfronting of revenue of existing contracts, then it's a margin issue. While it's not really a good thing, but there'll be some amount of derating. But I think it was trading at 16 times a year ago. So maybe that is the new multiple in the near future.
The only thing is I hear so many people on social media saying, hey, Infosys is not a Satyam, so don't do this. I'm saying no, the market right now in its punishment to Infosys stock is not treating it the way it treated a Satyam or some of the other scams. This is just a natural course correction to an event that has happened. And if it all comes out okay, then there's nothing that stops the stock from regaining some of the lost P multiple as well.
In this last 1 year itself, we've heard so many cases. Obviously, not cases like such big companies like Infosys, but the smaller names and corporate governance issues have been punished.
Yeah. I mean, again, I don't. It remains to be seen. Let's see, and whether. But today's stock price move is an indication, Devina, that the market is not completely convinced, because at the end of the pre-open session, it looks like Infosys will start off another 2% lower after the big cut that it had in trade yesterday. So let's wait and watch. The other question, Chakri, and quick thoughts here, is whether you are convinced about the PSU names now, because the last few days, the divestment candidates are going up and gaining steam, despite a large portion of the market saying, no, we don't believe this because we don't know when this will happen. But PPCL, Shipping Corporation of India are all moving up.
Yes, indeed. I think, some of the divestment bet as far as the government is, there's a sense that it's realizing that what it did to an ONGC HPCL is not the right way to go about it. And in fact, I think there has been an admission by the government itself that, ONGC can go ahead and sell HPCL if it wants to. Against that backdrop, I think companies with a lower government stake and which are not so strategic. I mean, BHEL is not strategic anymore. And so from those kind of companies, you'd probably have easier candidates to sell.
Yeah, and the fact that up until now, most companies which have a steady ROC, have a steady ROE are PSU companies, but they don't really attract that kind of attention from the investor community just by the backing of being backed by the government, and that's.
I think the problem is, if you look at Bharat Electronics, for instance, one of the reasons why the company derated was a restriction on their profit margins. They said government contracts, there's only so much margin that you could make, things like that. So a privatization completely allows a company to do free market pricing, and therefore a re-rating of the multiple. So if indeed all these companies are, go down that route, then there is a genuine case for re-rating of the multiple.
What's your view on housing finance companies, Chakri? I mean, obviously, India Bulls left alone. You can comment on that also if you want. But just in general, while specific pockets within the NBFC space are gaining traction, housing finance seems to be in the doldrums a bit.
Housing finance is a reflection of a poorer consumer sentiment and poorer consumer spending. So this is probably the biggest ticket item that a consumer can spend in terms of a housing EMI. So it's unlikely to, the loan growth rates are unlikely to pick up anytime soon, at least for the next 2 or 3 quarters in the case of housing companies. Yes, RBI is expected to cut rates, and given that most of the loan are made on floating rates in this country, the EMIs will be lower for fresh loans. So that will be a real trigger, but that's probably a good many months away.
Okay, Chakri, stay on, so much more to talk about, but it's time. 3 minutes to market open. Let's tell our viewers all that they need to know to stay ahead in trade today. First up, Axis Bank's results above estimates. Asset quality improves on strong recoveries and upgrades.
Tax reversals aided the bottom line of Asian Paints. However, decorative business segment in India saw double-digit growth for 7th straight quarter.
RBL Bank's second quarter was below estimates. The management expects the total stressed accounts to be at 1,800 crore rupees.
Bajaj Finance says that Bajaj Life Insurance has signed corporate agreement with Axis Bank in the second quarter.
Amongst earnings reported after market hours on Tuesday, Oriental Bank of Commerce, ICICI Prudential, IndiaMart, Intermesh and CEAT posted good operational performance.
And lastly, Linde India will sell its non-core assets in Chennai and Hyderabad for about 1380 crore rupees.
Okay, some stocks. And very quickly, since Infosys started off 2% lower, Gaurav, Bissa, quick thoughts here. What levels do you foresee?
Well, as long as it's trading below 640, the next set of supports would come around levels of 600, 595. So for me, the next set of buying would emerge at levels of 600.
You know, RBL Bank is the other one, Devina, and is likely to start off even lower, 10% for now. Let's see if it dips further. Chandan, Taparia, very quick thoughts here. Positions on RBL Bank.
Yeah, I think weakness could continue. In fact, till it doesn't surpass 300, we are expecting it to go lower. And the way it is opening lower, I think it can even test the recent low of 240 and lower levels.
Okay, quickly, Chakri, on Asian Paints or the paints companies so far, they've had a stellar run till now, but do you feel that could continue?
You know, the only game left in town is Asian Paints, Berger Paints and Kansai Lac, and they're taking away market share from the unorganized players. And I think that's a trend that you will continue to see. And so from that, yes, the valuations are high. So from that perspective, they'll probably tread water, but not much of downside.
Okay, that's on Asian Paints and Berger Paints. Remember, we'll wait and watch just what Berger does from last quarter to this quarter. Stock has gone up significantly. Quick top calls from both our technical experts. We're 1 minute away from market open. Chandan, Taparia, let's start off with you. Your top call for the day.
Yeah, discuss about two trading idea, ICICI Bank and Titan. So I think I can talk about Titan again. The stock has potential to give the fresh breakout. So here we are expecting a fresh target of 471 with a stop loss of 441.
Okay, Gaurav, Bissa, what about you?
Well, for somebody who wants to play for short term, I would recommend buying Coal India, target of 216, stop loss of 206. But if somebody can hold for a few weeks, few months, then Titan would look a better bet.
We'll also watch out. By the way, Gaurav and Chandan, take a moment to thank you, gentlemen, for joining in today and giving us your thoughts. Really appreciate your time and happy festive season. We'll, of course, see you on the Murat Trading Day as well. But while we're talking about a lot of other high flashy names, there are some interesting names that are hitting fresh highs. Amrut Anjan, a stock hitting fresh 52-week highs for itself. We've seen Westlife Development come out of a slumber and hit fresh 52 highs as well. So a lot of these mid-sized consumption names which you don't normally hear are doing really well, and we'll watch out for some of those as well. But principally at the broader end of the spectrum, RBL Bank remains the stock in focus. But let's start off with how the markets and the large caps are doing. So flattish moves, about 0.25% up for the Nifty Bank. So that is still doing okay. But the Sensex and the Nifty are flat. Some pressure likely by a stock like Infosys, but no movement whatsoever. Hardly any corrective moves there. Bank Nifty holding up. The mid cap and the small cap indices should come up on your screen, and let's see what those are doing. Again, flattish moves. The mid cap index is absolutely flat. The small cap index is up about 37 points, so 0.28%. Let's get the heat map up on the screen and let's see what Infosys is doing. On the downside, another 3.5% gone. And by the way, the other stock which cracked in market hours yesterday in the dying moments of trade, Bharti, that's down another 3% in trade today. So these are the two names that you need to monitor. There is also some pain in Bharti Infra, Yes Bank, Cipla, Wipro is down about 1%. But the top two losers are Infosys, which is down another 4%, and Bharti Airtel, which is down another 3% in trade. It was at 397 Bharti Airtel on the futures, must be trading sub 350 currently, or sub 360 360 for sure. So do watch out for these two names. What's doing well? Bajaj Finserv, good numbers, and the tie-up with Axis Bank probably helping, up about 1.76%. HCL Tech ahead of the numbers, a bit of a bounce, and Axis Bank reacting to results, about 1.65%. TCS marginally in the green. ICICI Bank, yesterday's top gainer, up about 0.5%, and Bajaj Finance recovers a bit, up about 0.5%. Reliance, HDFC in the green as well, but HDFC Bank is not in the green. Keep that at the back of your mind. Lying flat somewhere. No big corrective moves either, so must be 0.5% up or minus for HDFC Bank, about 0.33% up in the green. So that's the those are the stocks to watch out for on the large cap space. But Devina, I won't be surprised if you're starting off with RBL Bank, because that stock clearly in focus.
Yeah, I mean the moves on the stock down about 9% right now at open for RBL Bank. So a clear disappointment with regards to its earnings, playing out right from Q1. So last 4 months, it's been graduating lower. Aside from that, Lakshmi Vilas Bank continues to be down about 5%. A few other stocks and the kind of results that they've posted before we talk about individual counters as well. So India Mart Intermesh reported strong set of numbers. Revenue and operational growth was there. Stock's been doing exceptionally well. The reaction slightly more muted but positive, about 1.5%. CAT had a weak quarter. Top line dropped by about 5%, a 30% drop in PAT. EBITDA came in high due to sharp decline in staff costs. The stock's down about 1.5%. And another stock in news, that's Sterling and Wilson Solar, gets a letter of intent for about a $635 million project. That stock's about 2.5% higher. Other losers, Hathway is down. You've got Snowman Logistics down 4%. Then Indiabulls Group stocks. Indiabulls Housing is down about 3% in the session. I think Adani Ports has also looked weak in today's trade. So Adani Transmission, I think, did well yesterday towards the end of trade. So you should pull up Adani Transmission is up
fresh
yet
highs,
again
by the way.
On fresh highs, 2.5% for Adani Transmission. Adani Gas is the other one that was active over the last 10 days of trade. It's a 0.25% higher in today's session as well.
Okay, so that's the long and short of what the markets are doing. Chakri, let's end this conversation on a good note. There are a bunch of stocks hitting fresh highs and some consumer names which you don't even hear. As I said, Amrut Anjan, Westlife, Blue Star is at new highs too. Any thoughts on those? Or if not, any of these Adani Group stocks which are hitting fresh highs almost every second day?
The market in general, the broader market, after the last several months, is trading at multi-year lows. We've looked at several stocks which are actually trading at 2008 lows.
Okay.
And so from that perspective, so clearly what is this whole thing about, the flight to safety, move to large cap has happened, and within large cap, a bunch of names is what people have invested in. So I think it's clearly time to start looking at some of these companies, good franchises, where demand has been the question. It's not the company financials. So from that perspective, I would start looking at the broader market, the good, strong companies.
Okay, Chakri, Lokapriya, take a moment to thank you for joining in today, and festive greetings to you and everybody in your team.
Thank you, and happy Diwali.
Happy Diwali.
Thank you so much.
All right, Mark Matthews, head of Asia Research at Bank Julius Baer, is also joining us right now on the show. Mark, thanks very much for taking out the time. Let's talk a little bit more about what's happening across the globe. We've seen Brexit and the excitement around striking a deal, but then that falling flat on the back of no parliamentary support. Trade talks, it's just so difficult to gauge what's happening because, one day there are talks of a trade deal being negotiated, the next day, some other requirements come about and that falls flat as well. So it's a little difficult to gauge as to what's happening globally, but the implications for Asia as a whole and the emerging market back.
Well, starting from the top, Brexit, I think the most likely outcome is the delay and then probably a snap election in Britain. So, therefore no immediate outcome, but generally a positive one. We are moving toward a soft as opposed to a hard Brexit. So I think the pound was down about 0.6% last night, but it's not a disaster. So I think as messy as British politics in most democracies are messy, it is moving toward a more favorable conclusion. And then on the trade side, I think there's also room for optimism because I think the deal that the US and China agreed upon a few weeks ago is a strong indicator that both of them want to take a truce and a timeout. And so I think we should be optimistic that when Xi and Trump meet in Chile, they will sign something. In fact, I noticed this morning that China has started purchasing U.S. soybeans for the first time in many months. So that's a sign of moving in the right direction. But what's really been the biggest headwind for Asian markets has nothing to do with any of that. It's simply the strength of the U.S. economy and the technology sector there sucking up the capital away from the rest of the world, including Asia. And that's been the trend really since 2011, I would say. And I don't see it particularly ending, or should I say I don't see an inflection point. And therefore, money will probably stay away from emerging markets. And the key thing to watch would be the dollar. When the dollar trend changes, that's when you can expect a more meaningful amount of money to come back into emerging markets, including Asia.
Where does India stand amongst all of this? So we've seen foreign investors slowly but steadily starting to put in money, at least in the last month or so. While the overall net figure is still a big negative for the month of October, there have been a few days where FII buying has happened. Is the thought process any different than it was a few months ago, or it's still probably China first in terms of whether or not they have to make any investments into the equity markets, and then the rest of the pack?
It's China first simply because of China's size, and I can't remember off the top of my head, but if I said China is 3 times the size of the Indian stock market, I think I'd still be too low. It's a much bigger market, and therefore it'll always attract attention, and because it's providing 30% of world GDP growth, people watch it much more closely. But I would say the mood has changed to a more positive one on India over the last month, and it's really a response to the government clearly becoming much more proactive. The corporate tax cuts were one thing, but the finance minister has held many meetings, or I should say press conferences, etc., to show that the government is committed to reform and trying to stimulate the economy across a whole variety of sectors, from automotive to financial. And so I think that 180-degree turn on the part of the government in the last month or so has inspired foreign funds to return to India.
What did you make out of the IMF growth projections? They've brought India's growth projections down to 6.1. This morning we saw Asia forecast for growth also being brought down.
I think 6.1 is probably about right if you're talking about full year GDP. I think there are a bunch of reasons to believe we are at a bottom in the India economy, and now the monsoon was delayed, but then you had good rains during the summer, so the rabi crop should be good next year. Corporate tax cuts, interest rate cuts, and exports and electronics very strong. There's a whole bunch of little things, and when you put them all together, I think we will, even if it's not showing up yet in the high frequency data, end the year at about 6% year-on-year growth. And that's a good rate of growth. That's nothing to be ashamed of. It's not 8% like it was 2 years ago, but relative to the rest of the world, 6% is a great number.
Mark, good morning. The skeptics out there, and great having you by the way, but the skeptics out there when told about this 6%, nothing to sniff at, say that if you look at the per capita growth from an investor's perspective, that India adds at 6% is what, $180, and that's not great for the kind of consumption growth that the country should ideally show, and therefore investors don't come in lock, stock, barrel, but take a measured approach. Would that be a fair assessment, or do you differ?
Well, I mean, yes, if you wanted to do it on a per capita basis, obviously everything looks much smaller than developed countries or China. But I would also, play the devil's advocate and just say that shows you the potential for a lot of growth if they can get things right. And I think they're starting to get things right. And the consumer definitely has been a disappointing feature of the economy. And I think that can be traced indirectly to demonetization and GST in part because it's held back employment in the small and medium-sized enterprises, and then much more directly, of course, to the NBFCs, which were doing a lot of consumer goods, cars and houses and white goods, and of course the liquidity crunch in the NBFCs has stopped all that. But I think that private banks can pick up a lot of that slack, and I think if you add it all together, we are at a low here. I don't know if I'd call it an inflection point because we're not predicting a V-shaped recovery, but I do think things will continue to get better over the next 6 to 12 months.
Okay. Mark, just wondering, a lot of people who are global investors, and because you yourself are one and you would have spoken to so many, have always maintained that investors don't come to India for infrastructure investments. They come to India for the kind of returns that consumers would give. Now, a large portion of consumer exposure could be taken via financiers as well, which over the last 12 months have been under a bit of issue because most of the financial names are doing consumer financing. Do you believe the higher valuations are a deterrent, or the long runway of growth would still attract large pools of foreign capital into the Indian financial space?
Well, for sure, valuations matter, and you're absolutely right that you have to pay up to buy private sector banks, but I think it's worth it because I think that the PSUs, which are something like 65% of the entire banking system, we know they're just being given enough capitals to survive, but not to grow by the government, and we know that the MBFCs are essentially paralyzed by this liquidity issue. So there is a time to shine for the private banks, which I think is now, and several of them have new management and their NPAs have largely been put behind them. So as is the case in most parts of the world, you have to pay for the good stuff, and I don't think it's any different with the private banks, and they would be one of our top picks, actually. I think they should be owned.
And which brings me to my second question, Mark. The government is on a divestment overdrive, seemingly. Do you think foreign capital will come in for the PSU assets in India, a strategic stake?
Well, it depends which ones. I'd have to say, not that I know a lot about them, but most of them probably aren't that interesting. They're probably not making profits. Maybe they could be. But the big ones that we know are good assets, like Bharat Petroleum, for example, I do think there will be very strong interest in those, for sure.
All right. Mark, while we were on the topic of equities as an asset class, I want to get your opinion on gold as an asset class, because so far this year, we've really seen the outperformance coming in from the yellow metal. Is that likely to continue to do what it's doing? We've seen central banks loading up on gold. We've seen even speculative trades and long positions being taken in the CFTC market. But aside from that, just the fact that you've seen this big price uptick, is that likely to sustain?
Well, clearly the momentum has been broken. It was a wonderful trade up until about, I don't know, a month or two ago. And it's a good thing that it took a break too, because whenever something is parabolic, a parabola looks like this and then it looks like that. So it's good that gold is pausing. I do think you're right to mention the speculative positions in the futures market. They are still very high. I think the weaker holders need to get washed out, and you can also look at the ETF holdings, which are very, very high, or at least the inflows into gold ETFs. And I'd want to see a bit of a washout into those, but I'd be a buyer of gold at about 1440, and I still think it'll finish the year at new highs. Well, not new highs, but highs for the year, put it that way. Because interest rates are low everywhere in the world, and we do have a lot of political issues in the world, the election in the US coming up, et cetera, et cetera. The US-China, as much as it's a trade truce, we all know that these are two superpowers bumping up against each other. I think it makes sense to have about 5 to 7% of a portfolio in gold.
Right, just balancing out the risk then. What's your sense with regards to the US equity markets, and do you see any hiccups in this move that we've seen where the S&P and the Dow, both of them are trying to, both the indices have been holding on to those record high levels. Do you feel that there is a speed bump that could have a more amplified effect in markets like Asia and the other emerging markets?
Well, I think that the bull market will continue, and there's probably three reasons. The first is I believe Donald Trump will be reelected next year. Moody's recently issued a report based on three different factors showing that's a high degree of likelihood. And we know that he's pro-business. The second thing is that I think interest rates are likely to stay very low around the world. They might not drop a lot more, but if you look back at long-term charts, interest rates, they tend to need to bottom for a very long time before moving up again. And the third point is simply, yes, this recovery has lasted over a decade in the United States, but the pace of growth is about half of what it was during the second longest recovery on record, which happened to be from 1991 to 2000. And so there's actually a lot more growth that still can happen in that economy. And I put that all together, and I think actually, yeah, the bull market can continue in the United States.
Right, Mark. And on that positive note, it was great chatting with you. Thank you so very much for joining us with your thoughts.
Thank you.
All right, markets for themselves, for the index, we're just about flat with a slight negative bias, about 0.2% given up on the Nifty. We're under 11,600. I think we were under it in yesterday's session also. Nifty Bank, those trading with cuts of about 100 odd points, 29,300.
Well, let's slip into a break on the other side. RBL Bank, the stock of the morning. The asset quality was worsened. We talk about that with Executive Director Rajiv Ahuja and talk about NHAI's project target for the rest of the year with Chairman Nagendranath Sinha.